Hey there, and welcome to OptionUp. We're all about building a smarter way to investing, a way that's designed to generate consistent monthly income while also building your wealth for the long haul. So let me ask you something. Are you looking for a way to generate real consistent income from your investments? Without all the stress and the constant worrying about what the markets are doing day to day. If that sounds like you, then you're in the right place because we're going to show you exactly how that's possible. Let's get right into it. You see, OptionUp isn't just another faceless investing platform. It was actually born from a very personal mission, a mission to empower investors just like you. My name is Ankit Agarwal, and I built OptionUp. The platform is built on over 15 years of hands-on in the trenches investing experience, and that's combined with more than a decade of leading AI engineering teams in the fintech world. So what we're doing here is taking proven real-world market smarts and merging it with some seriously powerful technology to give you a real edge. And this is really the why behind everything we do. It's not just a theory, it's a real story. OptionUp actually started when my cousin lost her job. She had zero investing background, but using this exact strategy, she was able to generate $4,000 a month just by, and I love this analogy, collecting rent on the Amazon shares she owned. That's the kind of power we want to unlock for you. Okay, so how do we actually do that? How do we get there? It all starts with the foundation. I mean, before we even touch on strategies or tools, we got to talk about getting into the right mindset as an investor. There are really three keys to long term success here. First, you have to adopt a long term mindset. Look, trying to perfectly time the market is just a losing game. Second, and this one is huge, you got to keep your emotions under control, both in the good times and the bad times. And third, you need a disciplined, data driven approach. That means knowing when to make a move, and equally important, knowing when to sit on your hands and wait. Warren Buffett said it best: be fearful when others are greedy and be greedy when others are fearful. This just nails that second point, doesn't it? The market is driven by emotion, greed, and fear. Our entire goal is to ignore that noise and use data and logic to find the real opportunities that hide behind all that hype and panic. All right, so with that mindset in place, let's get into the nuts and bolts. We're going to break down the core of the option up method, what we call the three pillar strategy. It's all about creating balanced, sustainable growth. So here's what it looks like. We allocate the lion's share, 70% of the portfolio, to generating that consistent cash flow we talked about. Then 20% is focused on long term growth. And the last really crucial 10%, that's there to protect your wealth from inflation. So let's talk about pillar number one. It is all about repeatable, safe income. Most people think options trading means gambling, high risk, unpredictable outcomes, and the chance of losing everything. But that's not what we do. Instead, we use a structured approach called the wheel strategy. You get paid to buy great companies at the prices you choose, and then you get paid again to hold them. The goal isn't hitting home runs, it's generating steady, predictable income while owning some of the best companies in the world. Let's go through a real example. Let's say you buy 100 shares of Apple at $270. Options contracts are always done in batches of 100 shares. Now, let's say you decide you're happy to sell those shares at $280, which is their target price or strike price. And just for making that deal, you get paid $200 in cash upfront. This is called the premium. So what happens next? First scenario. If Apple shoots past your $280 sell target, you sell the 100 shares at a $10 per share profit, netting you $1,000 and the $200 from earlier, which brings the total profit to $1,200. What about the other outcome? What if the stock stays below $280? Simple. You just keep the 100 Apple shares and you keep the sweet $200 premium from earlier. See, this is a win-win. You either sell your shares for a profit or you keep collecting premium and try again. Okay, now on to pillar two, long-term growth. Imagine a strategy that can double your money even if the stock goes down, you pay half the taxes on your gains, and you have an edge on professional investors from Wall Street. I know that sounds too good to be true, but check this out. Check out this example with Google. This trade is structured to potentially return over 70% in 2 years if Google is above $195 by the expiry date. But here's the really incredible part. At the time this chart was generated, Google is $200. So the stock could actually go down by $5 from where it is now, and you could still hit that full 70% return. Think about that for a second. If you do this on the best companies in the world, you really stack the odds in your favor. And finally, we have pillar three, protection. This is about safeguarding your wealth. So a small slice of your portfolio goes into assets like Bitcoin or gold, which can act as a hedge against the US dollar, and those nasty inflationary effects we're always hearing about. Here's a not so fun fact. The US dollar has lost 25% in purchasing power since 2020, meaning $1 in 2020 is now worth 75 cents. Okay, so you've got the mindset and you've got the strategy. But the big question is, how do you actually put all this into practice? Well, that's where OptionUp comes into play. This is where the magic happens. This right here is our options finder tool. Think of it as your command center. It shows a really clean, high level view of potential income generating trades on the world's top companies. It lets you spot the best opportunities in just a glance. Then, when you see something you like, you can click on the deep dive button. This is what you see when you click deep dive on Oracle. This is where you get a full breakdown, all the details on the available options for that stock. You can then fine tune your strategy to meet your exact return goals and risk tolerance. For example, since we target a 2% return per month, we look for a 0.5% return per week. If you're selling a put, you'd pick the $170 strike, and if you're selling a call, you'd pick the $195 strike. It's all about empowering you with the data you need to make the smartest decisions for your own portfolio. So, feeling ready to get started? Let's walk through the different paths you can take to begin your journey with OptionUp. We've got two main paths you can choose from. First, if you want a completely hands off, do it for me approach, we have a professional portfolio management service. But if you're someone who likes to be in the driver's seat, our self service path gives you access to all the tools and our strategy, plus guided support so you can manage your own portfolio with confidence. So there you have it. We talked about the mission, the investor's mindset, the three pillar strategy, and the powerful tools that bring it all together. Really, the only question left now is, are you ready to invest with real confidence?